Hey, it's Mack with PriceActionTradingSystem.com, and it's Wednesday. It's November the 12th. This will be our chart lesson for today. And in the end, it was just a two-tiered trading channel, really just a trading channel with a midpoint along here and then two tiers. And you can see if you measure these, they're pretty much equal distance. And and one thing I wanted to make sure I showed you is a lot of times how you can find these midpoints. Notice how all the closes are either on one side or the other, and notice right here how it opened. It closed on its high and then opened. It did back up and trade back down, but for whatever reason, those areas right there, you can see that that acted as support and resistance, and all your closes are either, for the most part, below or above that level. And that's a good indicator that there's some kind of important price level there, and that's happens to be at 2032.50 there. So just something to make note of and try to remember when you're looking for these spots. And they're not always right at the highs or the lows, but generally what I try to do is figure where I get the most touches and also incorporate the closes as well. And you can see that was kind of right across there. And this one might even be right there. Notice how it's kind of that little mid where the closes are above and below again. And then we actually catch it twice there. Um, and then this one actually looks like it could be one tick higher as well. And that probably still gives us our um, that's one thing I always do is go back and double check my lines during the day because they may move a little bit. And you can see no, that doesn't quite get it. I think that's probably why I had it down here. But anyway, it doesn't have to be exact. You still kind of get, this is still your mid important price level, and this was still your important price level on the low side. And somewhere right along, notice how that one back down there where I originally had it, it catches more of the closes right there. Notice that touch, those bars touching and closing below it. So that's the reason I had it there originally. I like it better there because it catches more of the touches there and more of the closes. So just something to be aware of, and wanted to show that to you. I really still like that one a little bit better, to be honest, even though you get another touch there and you get a few more closes. Um, Notice how you can kind of see that's the midline between that. That's like a congestion area right there. And that's kind of the midpoint of it. Prices were reacting to either side of it in some form or fashion. And that's real common. And there's a reason it happens. It doesn't matter why, but it just is telling you that there's something important about that price level. It's the same thing with all these red lines and yellow lines and green lines you see that are going horizontal across the screen here. Their previous days opens, highs, lows, and closes, and current days open, highs, lows, and closes, and so forth. And those are always important areas. And you can see this area right here, that's where prices closed for the day. So there's running a black line. You can't hardly see the yellow line, but that was the okay. Already gotten interrupted. Can't remember what we were talking about. I have no idea where we were at. I apologize. I'm just gonna kind of pick back up here. I think we were talking about the range and the importance of those areas. So in the previous days, the smaller lines are the previous days, and the larger lines are the current day. So this was the current day's high, the current day's low. The yellow was the current day's open, and what else? The black one is the black dotted one that you can barely see, but that's a really important area. And it's interesting because the black one is I think that's the day's close, and that's the same place as the previous days open, and you can see it was an important area across there. It's kind of acted as resistance or support. So, and then this yellow one was the previous day's open. So this is where prices open, and you can see prices reacted off it both sides. So pay attention to those areas, and even here's yesterday's low. Um, Notice how prices reacted off of it on both sides. So um, for whatever reason, those areas always come. They're important areas, so pay attention to them. I know it looks kind of. I've looked at them so long, gotten used to looking at them, so it doesn't. I can look at the chart and look through it and almost not see it unless I want to. So it may look a little confusing and a little messy or a little busy. And if it does, take them off, put them on there, mark them, and take them off or whatever. But with time, you'll get used to looking at them. But they are important areas, so make sure you pay attention to them. If you didn't learn anything else today, that's a good point to pick up on and maybe watch that through a couple times till it makes sense. But when I came in this morning, prices were working down. We were kind of hung up, and this is just a congestion area. You got to be real careful going, entering this. We had a break and a new low, so we're finding support down here is basically what's happening. Um, no, nobody's really started buying it yet, but they're really. I guess I shouldn't say nobody's buying it yet, but you're just kind of hung up in the equilibrium. You're finding support. And the selling is probably waning, but the buying hasn't really taken over yet. So you just kind of get hung up. That's what happens. It's kind of an equilibrium point. And when you start to see congestion, there's usually a reason like that. Like right here, that was yesterday's close, and it was holding prices. So they back it up and then get a running start and run it through. And they trap. Well, all they do is they trap a lot of people to the upside, and then they run it through. Either that or nobody else was willing to sell at this price, but you get a little correction, they're willing to sell it there. And so these important areas will do that kind of stuff. And notice then when it comes back, it acts as resistance. But you're working up now, so you want to forget about going short. But anyway, this area, all of this area is very congestive, a lot of overlap, a lot of stems on both sides. So just sit tight and wait and see what happens. And you can't go short into that. You really got to be real careful about going long. And notice I marked two longs here, and I'm going to explain why. Notice that you got notice these lows here. You got a first entry, you pull back, you get a second entry, it fails. But it's not really a failed second entry until it breaks higher here. And I still didn't really like it necessarily as a failed second entry, even though it is one. Actually, it was a failed second entry here, but you never get a break higher. And it's really, anytime it breaks higher here, it's a failed second entry. And that didn't come to right here. And so that's why I marked it there. Even though you got some more moves down, it's never broken higher above another bar. So it hasn't triggered as a failed second entry until right there. And that's why I marked it there. But that wasn't the real reason that I liked that trade. Notice that you had a first entry, a pullback, a second entry, and then you get another little push down, and it's like a double test of this last low. And so I kind of liked it as a trap, and then when it broke higher, it was a failed second entry short, but it didn't go very far, and then it pulls back again and tests, and now you get a double test of this level, and it turns up. And it's also a second entry long, counting off the high. Pull back first entry, pull back second entry. So you can see all that strong support across there. And a couple times it tried to act as resistance, but it just couldn't. And so until it acts as resistance and it holds, prices are probably not going lower. And notice now you got a trend line coming up, and you confirmed it here, but you got another test of it here. Notice how everything, even though it traded below it, everything closed inside there. And so I like that for a second entry long, a double test of the low, a bunch of different reasons that you're assuming people are trapped to the short side, and it takes off. And then you get this little pullback here, and it's right back to the trend line, and you do get a close outside, and notice that little 2-bar matching low, and it breaks lower and turns and goes out the upside. It's right off. This is what you call the key. Your key entry points are support and resistance areas, and generally entering with the prevailing trend. And right at this point, this is more of a range, and we had a downtrend, and now we've got an uptrend. So we're looking for longs off this line. And when you get this little, this is only a first entry, so I marked it in green, but I liked it because it broke lower first and went out the upside, and it was off the trend line. And that's where your best entries are going to be. And then you get a little break lower. It's like a breakout pullback long, and it bounces right off that trend line again, and it just keeps. Now that you've had your break and a couple legs up to a new high, you just kind of got to sit. Even though it's going higher, you just got to be patient and wait. And look how this thing does once it gets up here. It turns, and look how it goes right through the EMA. It doesn't check up at all. That is telling you something. Notice how all the way down you find resistance off the EMA. Mostly all the way up you're getting resistance, and then suddenly it shoots right through and goes below, and it comes back, it tests it once, and it comes back, it tests it twice. It didn't really break higher there, but it's still like a little double test. But notice this, that's a new low, first entry pullback, second entry. So that's a second entry short, or a two-legged pullback to the EMA. While the prices are moving, everything's under the EMA, and it is like a double, almost a, we tested that price level once, twice, three, four, and that's the fifth time on a second entry short. And you're looking for a new low because you've got this little channel working down, and your guess is you're probably coming down to here. You don't know that it's going to go straight down there like that, but they trap people long, and just get in right there. Nice trade. And guess where it bounces? Right here again. I don't like going long on that first entry because sometimes you'll get two legs down, but when it tries to go lower again and turns up and it's right off that little trend line, I just used the lows and the closes really, and I just kind of adjusted it later. It actually may be the closes because that catches that one right there. And where I originally had it off the lows, we didn't quite catch it. So that's probably correct right off those closes. A little second entry long right there, and you've had your break and new low, and it's bouncing off. And notice how the closes are getting higher and higher. That's a good sign, and off it goes. And then you get a failed second entry short right there. It's kind of into this important price area, but you didn't really have that as a midline yet. You're looking more, at this point, you're still more interested in this level up here. And we're not there, and you got plenty of room, but it just shoots right on through there and goes higher, as you can see, and rockets on up. And where does it go? Right to the highs of the day up here. And there's really no way you really want to enter in this up here. You're waiting for it to come back, and it's tempting to enter here, but I will always wait on a second entry before I'm going to enter off that midline after a big move up like that. And you get your second entry here. It's not a great setup bar. The way I originally had the trend line, I was looking at it a little bit lower, and we weren't quite back to it. So it's a little bit risky entering right there. It's a good trade, so I'm going to mark it green, but it's not a perfect setup. And there's a couple of reasons I just discussed. It's not back to the trend line. It's not a good signal bar. If you use this for a signal bar, it's okay, but you can't be entering way up here because this is really your true signal bar, so you're entering too late, and guess what? It backs up. And so you got to enter down here if you're going to enter, or you use the limit order and see if it'll come back, which it did. And if you're already in, this is one where you start testing that trend line again, and look at that bullish bar. I looked at this one and I'm thinking, you got a little bit of overlap there, but that's such a bullish bar that I liked it. And, easy scalp, and that's about all you get out of it, though. And then it turns back down. And then this is your first break of the trend line. And so you're expecting a retest. This is a two-legged pullback. It's a second entry long, but what I really liked about it is that, notice that low, it's that double test rule, and it broke lower and turns up and closes on its high. I like that to the long side. And then you get almost the exact same pattern in reverse to the upside. Obviously, this is strong resistance right here. Look at that new high. first test, pull back second test. So that's like the double test rule. Even though this was good for a scalp, it didn't go any higher and it turns down. So it's like a failed set. You can treat it like a failed second entry. And on a bigger picture, it probably would be. Uh, but you don't even need that. Just go short right there. And this looks a little bit rangy. So you might use a limit order here, try to get filled just to make sure you get out before you get back down to these lows. But it didn't matter. It just rockets on down. And that got you into 2 o'clock. And that was the last one I marked. You're still looking for that retest of the highs, and notice we ended up getting it before the day was over, and then we went back into this little range. And this, you could just treat this like a, trading range here. And if I'd still been trading, that's what I would have had on my chart. And this is a trading range with a failed break lower. Notice we traded up into this. It fell out the top, then fell out the bottom, and then went higher and fell out the top again and got back in the range before the close. So that's pretty much it for today. Not a lot of trades. Somebody actually sent me a notice and said I think they went long right here. But hopefully you can see why you don't go long there. You got this channel working up. You got your break and several pushes to a new high. But look at this. Even if you don't have that, look at all that congestion. You got to sit tight and wait on a trap or a second entry or something. And notice how everything's below the EMA there. That doesn't always mean anything. That's just, the fact that it's below the EMAs, that's just another clue. But it's like it tested it once, it tested it twice, it made a double, really a 1, 2, 3, 4, 5 tests of that price level and failed and turned down. That's 2 legs back. There's so many different things there, reasons to, there's no reason to be thinking long there for sure. And the only reason I liked it short was for the reasons I just described. And you're looking for a new low, and you're looking for it probably to come down here and test this. And, the low is right there, so it could just break lower and turn up here. But generally, you're going to retest a low like this at least once, or make a couple of attempts to try. So even if it didn't get lower here, it probably would have pushed and tried again, and then maybe reversed on like the double test kind of rule. So, and then of course you got a 2-tiered channel working on the way back up. You get the break, tries to make a new high, but the range is in play. It goes lower, and in the end, it still makes a new high, and it goes back in the range. So it's pretty typical stuff. Nothing really out of the ordinary. This is about what you would expect. A lot of times after a holiday, everybody's got some pent-up emotions and ready to buy or sell, and you get a big movement. Didn't tend to happen today, but still, there was enough movement within the range that you could, you could make some money. So not a lot of trades. A few of them are a little more aggressive. But anytime you're bouncing off a trend line, it's probably less aggressive, even though those are first entries or breakout pullback or whatever. But it's probably less aggressive than it would be if it was, in the middle or off the tops or something, like highs going up or lows going down, that kind of thing. So, but anyway, that's about it for today. So, I'm just trying to think if there's anything else. I believe that's about it. But I'm going to wrap it up. Hope you had a good trading day. We'll be back to do it again tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.